Good morning, everyone. I hope everybody's good. I hope you had a relaxing weekend. And welcome to the second week of August. Now, what do we have today? So far, practically nothing of importance. We've had some unemployment data from Switzerland. Came, as expected. 2% unemployment. I mean, nothing to see there. Yesterday, we had some data from China. Trade balance came a lot better. Imports came lower than expected. Exports higher than expected. Keep in mind, though, that these prices, exports, imports, so on and so forth, are not numbers that are adjusted for inflation, right? And I'm saying that because in a period of very high inflation, part of the series of data is actually the inflationary pressures, right? Somebody can be buying the importing or exporting the exact amount of things. They just now cost more, so that will push the exports number higher or the imports number higher, right? Whenever we are looking at, pure numbers, just keep that in mind. So what do we expect later today? Nothing, right? As simple as that. Today is expected to be a quiet day. We have again some data tomorrow. Nothing groundbreaking, to be frank. So it's a quiet start of the week in general, which means that the market are going to be more or less free now that we got the NFPs on Friday out of the way. The markets are going to be free to move once again for a few days because there is no big news data coming that investors might be bracing for, right? So keep that in mind. Now, what do we see following the price action we had last week? First of all, if I am to start with risk assets, Friday, the high NFPs number initially pushed indices lower, right? Good news is bad news is good news, etc. This type of logic. But we pared back the vast majority of the losses by the end of the day. And today we're once again consolidating near these recent highs. So basically, the price action still looks constructive, right? The last 2.5 days of price action following the decently good day we had in the middle of last week are looking more like a bullish consolidation. So I would expect that most likely we're going to see more upside in stocks, right? 4,200, as we said, 4,205 practically is the next upside target. 4,224, so very, very close to that level, is the 50% fib of this move high, this move lower from the all-time highs to the low we found in the middle of June. So quite an interesting zone around there, right? 4,205 to 4,225. We might see some kind of reaction from there, but for the time being, it looks like the path of least resistance remains to the upside. So I don't think it's a very good idea to try fading that. Now, technically speaking, from F.A.C.E, the cable remains interesting, right? We got another rejection last week from this descending channel trendline resistance. We seem to be consolidating, in essence, the prior gains, and the vast majority of the currencies, of the major currencies versus the dollar, look more or less the same. We've had a pullback, but for the time being, this pullback looks more corrective, right? Take the Aussie and the Kiwi as well. That's also prominent here. Somebody can easily draw pennants, all right, for these moves. The Kiwi looks very much the same. Let's have a look at them on the 4-hour chart. You'll get a better idea. There you go. Right. So to me, they also look like the path of least resistance remains higher. Right. We were having a discussion about how important was that, you know, the high of the dollar. Let me go to the dollar index. So here's the dollar index. We were talking about, you know, and a lot of people were coming out that this might have been the high in the dollar. And we might have started a big move lower. And yes, it is a possibility, right? There's no question about it. Then we had this big reversal last week, this big daily reversal here. An outside long white candle. And we've had some nice continuation, but this can easily be interpreted as a pennant as well, a bearish one in this case, right? Which would allow for all these pairs and more to at least make one more leg to the downside, at the very least. So I have to say that this rebound in the dollar looks more corrective to me, which means that there is a very good likelihood that we're still in some kind of a more complex correction to the downside in the dollar. And this little rebound is probably part of that larger corrective move lower. Now, as I said before, is there a chance that this is the beginning of an impulsive move to the downside, of a much bigger move that is just beginning? Yes, but you should always be conservative in your approach with the markets, meaning that you should never assume that a counter trend move is a new trend, right? Not until proven otherwise. So my initial assumption and my initial approach to it should be that this, for the time being, is a corrective move. Now, as I've said before, there is an important level to watch here, and it's this ascending channel trend line support. Confluencing with the 61.8 at 104.35. So 104.35 is quite important, but we're not there yet, right? We're actually quite some distance from it as we speak. So let's first make it to 104.35, and then we can have, you know, more detailed conversations about the possibility of like a larger move lower in the dollar. For the time being, though, I have to say that this rebound in the dollar doesn't look, you know, strong to me, and I think there is a very good chance that you know, short term it's going to fail, and we're going to see more weakness in the dollar. And this week, since it's not really heavy on data, might allow for that type of a move. Now, you know, I don't want to go over one by one all the FX pairs. We're going to go over them in any case on the morning edge. We're going to talk about things on F.A.C.E as well. In general, I told you what's the main theme having to do with FX and everything that's dollar denominated. So let me visit some of the rest, which is USD yen to begin with. I'm monitoring this closely. Right, we did close above the 134.50 support resistance area on Friday in USD yen, and this is, you know, a rather strong level we broke through. There is also, though, the 136 level, right? This previous low over there and the 61.8 of this move lower. In my opinion, this is the line in the sand for bears, right? You can still maintain a bearish bias and look for more weakness, and it's still a decent possibility as long as we trade below 136. But I believe we break through 136 as well, and the chances of such an event, you know, drop very, very substantially. So keep that in mind. So 136 is the line in the sand. As I said, it's the last castle for bears to hold if they want to see this corrective move lower, resume. Don't forget that the USD yen for the time being has found support at at an expected key level 131.50. So the reaction from there was, technically speaking, perfect development. It was the previous multi-year high. It was the completion of the broken ascending wedge that we had here, and we had a very nice reaction from it. So risk reward, yes, you can be short against 136, but we break through that. I think you don't want to be short anymore, right? Now, of course, yields will play a major role in what happens there. And I'm saying that, why? Because we find specifically the 10-year yield here in the US 10-year yield at a very interesting technical juncture also. We've had this descending channel, and now on Friday and earlier on today, we were testing the trend line resistance. So, we break through this, USD yen just resumes probably to new multi-year highs, right? We fail again from this and we stay within this descending channel and we get another leg lower in yields, we'll probably see a failure and another leg lower in USD yen. So 10-year yield at resistance is also another nice risk reward indication for being short the USD yen, right? Because you see the 10-year yield breaking through this channel and probably USD yen at the same time breaking through 136, you don't want to be short, right? If you want to be anything, then you want to be long. Until then, you can take advantage of both of them being almost on top of important resistances and try the other side of the market. There is a chance it's going to work, right? Yeah, interesting markets last week, as Steven says. They have been rather interesting, although I do see, liquidity being slowly drained. I mean, don't forget, we are, at the peak of summer vacation period, at least for European countries, for sure. I know that the US is not exactly the same, meaning, for example, schools have already restarted in the US. And let's be honest, the season usually evolves around school season, right? Because the vast majority of professionals, usually are parents as well. So, the schedule of your child is more or less your schedule as well. I mean, we're going to be gone here for vacations in August, most Greeks, but that happens, for example, because schools begin at 11th of September for us, right? So August is more or less a dead month having to do with other activities. But in the US, schools already started, so different story there. Anyhow, let's have a look at some other assets, and then I can go through some questions and we can wrap it from there. First of all, we're seeing an effort from crude to, put a little bit of a break to the losses. It stopped on Thursday exactly on the 61.8% fib of this move higher, of the last bull leg higher. It held again, that's on Thursday, it held again on Friday. It was at some point producing a decent recovery, but it failed to maintain its gains and closed, near the lows of the session. And today we're seeing the same thing again, right? This type of price action, unfortunately for the bulls, is not bullish. The fact that we're just holding a support, but being unable so far to produce any decent rebound, is probably a bearish signal, right? So I don't only think that there is more downside left in general for this move, but I think that it's very likely that we're going to see this downside unfolding soon, very soon. So I doubt that the 61.8 here at $89 is going to hold, and I do think that we're going to gun for the next target, which was my initial targeting since we started unfolding this corrective move, which is at 85, right? So we have, to be more exact, at 86.40, we have the equality target of the first leg lower with the second leg lower. A little bit lower, we have this horizontal support resistance area, roughly at 85 to 85.50, right? So I do think that that's a more interesting area. And we also now have this descending channel. So who knows, we might even overthrow through that 85.50 area and go for the channel trend line support, which, you know, in a few days is going to be below $80. So I think crude should remain in the defensive. Oppositely, on the other hand, look at silver, right? Technically speaking, this can't get more beautiful than this. Impulsive move higher, we had something like an 11% gain in 3 trading days. You can't get more of a corrective move lower than this, right? A choppy, overlapping, slow consolidation. I think there is a very, very high probability. Nothing is certain in trading, right? You need to keep that in mind. But there are some formations that give you amazing opportunities to have very respectable risk reward. And that's all you can ask as a trader, right? There is no magic 8-ball that's going to give you trades that are, you know, bulletproof and unlosable and things like that. Whoever promises you things like that is a charlatan, right? But I can tell you that after an impulsive move higher, this type of a corrective formation looks beautiful in my eyes. So beautiful that, in fact, I bought in the financial markets outside of the investing part that I'm accumulating silver. I bought some silver a few hours ago today, right? And as a shorter term trade, looking for a move to 2150, which is the next upside target. Why is that the next upside target? Because it's the 38.2% fib of this last bearish leg lower that we've had, right? 2150. So I'm looking for a trade from here to 2150. I don't want to see silver deep below 19, right? I'm going to be bailing out. So it's better than one-to-one risk reward. But as I've explained to our members in the past, whenever I have explained, you know, my trading approach, etc., I don't care about risk reward being always like amazing, like a 3-to-1 or 2-to-1, because in my opinion, it's not all about the risk reward. It's a combination of the risk reward and what, from experience, you believe are the chances of something happening, right? So if I think that I'm taking a position, for example, that's counter trend, just because I see some specific signs and I believe there is a, let's say, higher than usual chance of a reversal, I'm still looking for a reversal, right? And in that case, that means that it's a rather low probability trade, less than 50%. So if I'm going into a trade that I believe, you know, from experience, let's say ballpark, that it has like a 30-40% chance to play out, then I'm going to be looking for a very good risk reward ratio, right? At least 2-to-1. But on the other hand, if I'm looking at a setup that I feel has a very high probability of unfolding, I'm going to be more than fine, even with a 1-to-1 risk reward ratio, right? Because I have a 1-to-1 risk reward ratio, but if I feel that the chances of that playing out is 70%, you know, I take 100 of these trades I've made good money overall. Right. So in my opinion, it's the combination of these two that you should be thinking about, not risk reward in isolation. And I'm saying that because I've seen inexperienced traders pay attention only to the risk reward ratio, right? Because they are at least smart enough to do some reading. And the first thing people are going to teach you is that you need to use proper risk management, which is absolutely true, right? It's A to Z. But they just put all their effort in finding good risk reward trades, irrespective of how likely they are to work out, right? So if you take a trend and you keep looking for reversals in this trend all the time, even if you're looking for 3-to-1 risk reward trades, you might still end up losing money, right? If you go against a very strong trend and just take position again and position again, take as an example the S&P until COVID, right? Until the COVID sell-off, or in the period after the COVID sell-off until recently, right? A constant grind higher. I know I'm not showing it at the moment, but all of you know how that has played out. So, there were people that were trying to fade risk assets all the time. Every time we had a little bit of a daily reversal, they were like, okay, this might be the top. Let's take a short here. And they ended up like losing 8 out of 10 trades. So, if you took these trades, even with a 3-to-1 risk reward ratio, you would still have lost some money. So it's not all about risk reward ratio. It's all about the combination of the probability of the trade you're looking to take in combination with the risk reward ratio. I bought today, as I said, mate, a few hours ago, actually. So I'm looking for this bull flag to play out for a move to 2150. And as I showed you before, I think that the dollar has a very good probability of helping out, because I think that this rebound in the dollar has started looking more like a corrective rebound in a more complex corrective move to the downside. So I expect that there is a good chance that the dollar will have more weakness in the days ahead, right? And that should help gold and silver as well. Now, you see that gold, on the other hand, is on a resistance as we talk. And definitely silver looks much better positioned. That's why I picked silver, right? And I'm going to be fine with whatever happens, right? For me, this is my mentality. I like this trade. I took it. For me, this is already a done event, right? I mean, I'm committed to it. I know that I'm not going to regret it even if it doesn't work, because I had all the right reasons to do it. So for me, that's it. I mean, the trade is already practically over, right? Win or lose, the trade is practically over, because the trade should be over for you most of the times, with the exception of managing positive outcomes, right? Like if you want to at some point take partial profits, or if you see that it ends up having more upside, not taking all your profits at your initial target, but keeping some and let them run, right? Other than that, the trade for me is already over. And that's how it should be mentally, right? So you don't have to worry about it anymore afterwards. Now, gold, watch for this key area at around 1800, right? We break through 1800 in gold, of course, that's going to be another bullish signal for the metals. Speaking about bullish signals for the metals, this is another bullish signal for the metals, right? The gold-silver ratio. And why is that? Why do I see a bullish signal in the gold-silver ratio as well? I'll tell you why. because we had a rather impulsive move lower in the gold-silver ratio, which I've explained multiple times, that the gold-silver ratio is moving lower most of the times when metals in general are doing well. We've had a rebound that didn't have the same type of momentum. And look at the indecision candle on Friday and how it's trying to roll over today. Right, so the gold-silver ratio also is telling me that it's a very good likelihood that there is at least one more leg to the downside here, which should be positive for both metals. Let me see if there is anything else I want to talk about. I think that's it, more or less. Keep in mind, I'm not going to be today in the other two webinars. I'm going to be traveling. I have a long road ahead with my family. I'm going to be leaving after this. But I'm going to be tomorrow for the flow show. I'll be doing the flow show from Halkidiki, our vacations destination. I'll just won't be there for the next two webinars, right? I'm going to be driving for at least like 5 hours. So let me go through your questions. How about, is that the, sorry, Laura, went through? I don't understand your question. Let me address the previous question as long as you retype it, because I don't understand. Perhaps it's because I'm tired. I was trying to wrap up things yesterday. Somebody's asking again for the Aussie USD. I said it before, in my opinion, there is a very good likelihood that this is a bullish pennant that is being formed here, right? We got rejected from the 61.8% of the last move lower, but this price action we've been seeing last week seems more corrective to me. So it seems likely that it wants to at least have another leg higher. 71.50 looks like a very good target. No, I didn't cover natural gas. Okay. Let me have a look at it. There you go. This is what we drew last week for natural gas. Still seems valid to me. Quite an impulsive move higher. So far, the move lower looks corrective to me. So I would give it a much higher probability for a continuation sooner rather than later to the upside, towards the previous high at 965 again. Oh, sorry. I just saw your question, mate. Hey, all, Steve, are you still short than the S&P? No, I'm not, mate. I've closed my position since the beginning of last week, when we, since the end of last Monday, as I had said I would do. Right, I had said that I'm going to let one more day, because on Friday, not this Friday that just passed, the previous one, we closed above the confluence of resistances at 4,100. Then I said on Monday that I didn't close my position and I wanted to see what's going to happen that day. And at the end of that day, as I had said, that if we don't drop back below it, I'm going to close it. I did exactly what I had said. If I had, changed my mind, I would have told you so. So yes, I've now taken all my profits in the S&P. I'm not opposed to the idea that this rebound might be corrective and there might be more weakness. I just don't want to go against what can be the beginning of a pivot in central banks, A, and B, in a summer market environment, right? So I was very content to take profits. And if I see again an impulsive move to the downside, I'll have no problem recommitting to the downside. But for the time being, I don't want to be short anymore. Steve, do you think Kiwi or Aussie look like a better long? Thanks. Yeah, I think that is an easy thing for me to answer. I think the answer is the Aussie. You can see here why. Look at the Kiwis move. I'm zooming out. And look at the Aussies move. Much more well behaved without violations of the bigger downtrend channel, right? So between the two of them, I would easily go for the Aussie from how they've unfolded so far in all this period of, longer correction. So the Aussie. My pleasure, Catherine. Okay, so I guess we wrap it up here. Don't forget to join Blake and the team in exactly 2 hours for the F.A.C.E webinar. I'm pretty sure there is a nice interview today as well. Actually, let's check it out together. Who do we have today? Keep in mind, you can always check, right? You go to the ForexAnalytix, you go to webinars, you go to scheduled interviews. We have Raxa today. This is a very good technician, right? So today we also have an interview with Raxa after F.A.C.E, and of course, for those of you that are subscribers, we have the 15 minutes after the interview is over, roughly, we have the morning edge. Don't forget to join Blake and Stelios there. As I said, I'm not going to talk to you again today, but I will talk to you same time tomorrow. Okay, so I wish you all a beautiful rest of the day, and take care. Bye.